But here's what I want to do to give you a realistic example of just how much people are not planning for this. So I had someone come in the office this week, and I realized this isn't everyone's situation, but this is real. This happened this week. So I had people come in the office, and together with their combined assets, they had $3.1 million in all of their tax deferred accounts. That's simple IRAs, IRAs, SEP IRAs, traditionals, Roths. The Roth, which is often the case, was the lowest amount. So when you subtract out the Roth, which does not affect IRMAA, you've got $2.9 million left there. Let me just give you a quick example of what's going to happen when they hit the world of required minimum distributions based on current numbers, which we know are all going to inflate. That is approximately, now this is not exact, so don't go pull out your tables. That is approximately, if they were RMD age right now, that's $130,500 a year that is required to come out as a taxable event for them as a couple. That is already way up into their $206,000 threshold. That's their limit. What about their pensions? What about the withdrawals they're taking from anything else that they've got? They're in IRMAA, and they're going to be in it forever. They'll never be able to stop it unless they work with a planner to start doing Roth conversions to pay some of the tax now to get that converted over to tax-free. They're going to have massive issues for their children and grandchildren when that all gets passed on as non-inherited IRA money, because as Paul said, that's got to be liquidated in the next 10 years on top of, let's say they're married at the time. You pass that on to your children, they both work, and then they're taking out $100,000 RMDs every year. It's a big, big problem. Right.
Well, another thing too, if you look at the 2025 IRMAA bracket, so the fourth IRMAA bracket for a single filer is $200,000, right?
Right.
Earlier in the show, we said IRMAA started in 2007. For a single filer in 2007, the first IRMAA bracket started at $200,000. So much for inflation.
Yeah, absolutely. Friends, I believe that this is going to be one of the biggest financial planning topics in the coming years. It's going to be on everyone's radar. It's going to start to affect people more and more as tax deferred accounts get bigger and bigger and bigger with the market. And then those distributions and RMDs come out, and people are going to start getting, and we'll find a way to put this on the screen, but they're going to start getting these IRMAA letters. And whenever they do, they're going to see what the benefit amounts are and what they get reduced to, and they're going to be ticked off.